Hello everyone, welcome to Yugi Forecast YouTube channel. This is my fourth video and the first video about a currency pair which is Euro USD. Actually, I have categorized my videos to 5 parts. First, in the first video we had on this channel, it was about Bitcoin, which is a crypto category, and then we had a forecast about S&P 500, which is an index, and later we had gold forecast, which is a commodity, and now it's a currency pair, Euro USD. And the next video will be about a stock, maybe Nvidia. So we have 5 categories. We have cryptos, indexes, commodities, currency pairs, and stocks or shares. This is a very good market, Euro USD. I've checked too many rules to test if this is the right market to trade, if this is the right place and the right time. On Euro USD long-term diametric pattern that is appearing here, it's 6 monthly cash data chart. It means every segment of line has taken 3 months. So every 2 segment of lines on this chart is a period of 6 months. The low and high of a 6-month period is plotted with lines which is called cash data, which is something specific for no wave. We don't have this kind of plotting, this kind of charting in any other technical analysis. Well, we have detected an A, B, C, D, E, F, and G is going to happen. The characteristics of 2 or 3 waves, beginning waves, suggests us that this is not a triangle, it's diametric, and we are nearly at the end of the diametric. And you can watch this here. Euro is from 1971. This is the year Euro was invented and entered the global market as a money. So this is the time and price target we expect for wave G to take. The expected time, not maximum, but the expected time for the end of this diametric, which will be end of wave G of the diametric, will be around December 2033 or the end of 2033 year. It will be the end of this bull market, which seems that have already began here around 95 cents. And the price expectation for this wave is $2.06 for each euro. So it means for the last 10 years, for the next 10 years, price will be going up. Euro will be growing and will be gaining price toward $2. It means 1 euro will become $2 in the next 10 years. this actually neo wave is some kind of prognosticator. It is tomorrow newspaper which is telling you what will happen next in the market and how long it will take. So if this happens, this move happens here, it means it is taking 5 years instead of 10. It will tell you that be patient, something's going on, it will take more time. For example, this price target will be touched sooner than 10 years. It will be come here, then move there and come back again and slowly go up to spend time. So this is a very long-term chart which plotted the data of the market based on 6 monthly cash data, where the chart began in 1971 and it's 2024, beginning of 2024 right now, and it will tell you what will happen in the next 10 years. So I would like to move to lower time frame to see what is actually going on here. It has really finished wave, if has finished or no, there are still something to happen in the market. It will move maybe down toward lower targets. So we need to move to the lower time frame to see if it has already ended and began a new uptrend era, or it's going to go on declining toward down. If this pattern, a geometric connected with an X wave to an expanding triangle, reverse alternation, because wave B is larger than wave D, it means this is reverse alternation. And this is the quarterly cash data. You can see on the chart, it means the cash data was plotted cash data has been plotted on quarterly, it means 3-month time periods, and it's the lower time frame. This big wave is the wave F of the geometric we had on the 6 monthly cash data chart. So this is the more focused chart on the last leg. It is still the same structure we had on higher time frames. Sometimes it happens that you have another pattern on higher time frame and something different in lower time frame. But when you have the same pattern on different time frames, it means that the market is most clear at this moment or at this part of time. So this can be geometric connecting with an expanding triangle with X wave, and this can be wave E of this expanding triangle waves. The retracement of wave E is telling us that the post-pattern correction was made, and there is an important rule for every pattern in no wave that needs to fail the rules of post pattern retracement. So it has already passed, and it means the low of the diametric, the low of wave f of a diametric has been already in, and we are going to move up toward larger numbers, so bigger numbers. This is again the lower time frame. This is a rule to move from higher to lower time frames on the chart based on no wave. Now it is the end of wave if we had onto higher charts, higher time frame charts, and this is that small move which was not clear enough. So we have an impulse wave here, then a correction like a diametric up to here. So we are on the wave G of this diametric. It's shaping. It could have been finished already here at 1.08, but this is the medium price target I expect, and this will be the last price target that I expect for wave G to complete around here between 106 or 103. So there will be a trigger point when the third leg of this big zigzag or impulse will be created. You can see A or 1. This is wave A or wave 1. Wave A of a zigzag or wave 1 of an impulsion. So this is the correction, and we expect another move here. We don't know exactly where it will finish, no one knows, but this is the best price I expect, 1.06. And the time requirements of this geometric, which is a correction, will finish around here and move toward 1.22 is gonna happen. It will take time, but we cannot exactly tell you when, because there is nothing exact in the market forecast, but this is the most probable. But until we don't know where will this geometric finish, it will finish around here or here. So we have to wait for the market for now. The price, well, the price is 1.07. It was 1.0770 when I was drawing the cash data, but as you can see, the price is going down as expected toward 106 or 103. So I want to hide the candles so the chart is more clear this way. I will make a video of when this pattern ends and a post pattern correction appears to confirm our count. Again, it's better to move to the lower time frame. That was monthly, but this one is weekly cash data. This is the lowest time frame I'm using to forecast the market. If I get too narrow, go deep into lower time frames, many mistakes will be made. So I prefer not to move lower from this time frame, because the structure on 6 months, quarterly and monthly and also weekly time frame, they are all the same. The structure looks to be an impulsion, a 1 2 3 4 5, or a zigzag, which can be one can be wave A, which is an impulsion, then the correction as wave B or 2. But if the price gets down below 1.0, so below $1, so it means that the impulsion scenario or the zigzag scenario will be cancelled. So above this $1, there is still the probability that this price will end here, and it will be a trigger point here, then moving back toward higher time frames. So as the higher time frames are advising us or suggesting us, the price of wave C will finish around 1.22 or 1.34. So it will take more time to complete that big pattern. 2 or 10 years, it will take 10 years toward $2. So for now, wave G will end around here, around 106, and the trigger point is happening. There are 3 time expectations. This is the minimum time. It will be June 2024 or October 2024, and maximum it will be February 2025. These squares are the price and time expectations we have for wave C or 3 to happen here. So this one is more bold. You can see the thickness of the square is it means this is the medium time we need for wave C to finish. So around 106 will be a good time to enter the market. Taking enough time, it will move toward 1.22 or 1.33 dollars for each euro. I wish you have liked my videos, and please do not forget to subscribe to see my later videos. They are precious. Actually, if you have watched my last videos, you may have this question, why it takes too long to broadcast and make more videos. Actually, many people will around the world will use this forecast to trade, to use their own money. So I'm not recommending them to use my forecast for trading, because it's only one way of trading. Forecasting is only one way of trading. There are also other factors need to be taken, like money management, accepting risk, and controlling your emotions. So based on new wave theory, which is a forecasting technology, it's nearly the end of this corrective move, and an impulse move will happen around here and it will be going up and up. So I wish you have a good time. You can watch my last videos. The first video was about Bitcoin. It was about 5 or 6 weeks ago. The price was around $41,000, and I forecasted Bitcoin to move toward $50,000 and more, and then the bear market will begin and the bull market will finish. So you can watch my last videos, and the next video will be about Nvidia stock. Thank you so much for watching. Please support me with your likes and subscribes. Thanks.